What up, investors? You're not going to want to miss this one. This one's a doozy, all right? There's a company that is selling for negative $2 billion, which means if you buy the entire company, they'll give you $2 billion just to own it. This is not a joke. This is actually true. If you want proof, I'll show it to you right now. Look at this. These numbers right here. Market capitalization is the price of a company, 7.88 billion, and enterprise value means the price of the company less its cash, subtracting cash. So basically, this company has 9 billion, actually $10 billion in the bank, and it's only worth 7.88. Isn't that insane? Here it is. Net cash, 9.96 billion right here on the shortened balance sheet. We're going to come back into these figures. I'm going to do a thorough analysis. There's a lot to talk about. I got slides, I got bar charts, I got all kinds of information on this company. All right. Here's the agenda. We'll do an overview, then financials and valuation of the company. Obviously, I started on the valuation already a little bit. Then strategy and adaptation that they're doing. The risk, the big risk with Robinhood. And then finally, the conclusion. What I think about the stock, whether it's a buy. And I'll give you a hint right now. I like the company. All right. So first of all, overview. What is going on with the company? So whenever I do analyze a company, I'll start over here on stockanalysis.com. I'm not affiliated with anyone, not Robinhood, not stockanalysis.com. So first thing we can learn is the market capitalization, as discussed a little bit. Revenues here 1.5 billion, so that's cool. No PEs, no dividends. Price target for analysts is a little bit higher than what it is right now on average. It's 12. There's actually a whole tab for forecasts, and this is it. You can see the low is $7. I actually heard someone on the news price Robinhood at $5 per share, which is crazy. That means the company will be worth negative $5 billion. So you'd be paid $5 billion just to take over the company, which is absolute madness, but they probably won't sell it to you anyway. Here are the recommendation trends. It looks like it's been decreasing with time, especially the number of analysts that cover the stock. Back into the overview. This company is one of the first companies, if you don't know, to offer zero commission trading. Ever since they offered that, the entire industry has been forced to change because Robinhood was stealing market share, was stealing customers basically by offering such a good deal. And so especially a lot of the new traders and investors went into Robinhood so they can save that commission. But ever since, they've continued to actually lead the industry. And you can tell by the fact that there was an interview here where they're rolling out 24/5 trading. So that means trading is going to be open 24 hours a day, 5 days a week. Okay, so they're innovating still. There's an interview right here with Vlad himself discussing this. If you're interested, you should watch this. This interview is from May 12, 2023, so it's very recent. And there's a big drop in Robinhood that happened on Friday. I think most of the drop here, as you can see on the one-day chart, was caused by regulatory concern, okay, which is kind of like the risk that I'll be talking about. So there's a proposal by Gary Gensler to look into how the rules are governing equity markets for payment and order flow. And payment and order flow used to be the vast majority of Robinhood's revenue, but it's no longer the case. And I'll show you. We'll go into detail, guys. We'll go into detail. But first, we got to get through some meat and potatoes, okay? We're going to go into the financials and do a financial overview of the company. We're going to quick quarterly so we get some more definition, and we'll get started. First, revenue. Quarterly revenue increasing steadily over the last 5 quarters, obviously during 2021. By the way, this is going to be a very, I'm going to talk a lot of numbers. All right. It's going to be a lot of numbers. but I'm gonna look at the what was it, the 10Q. We're gonna look at the quarterly report, and we're gonna glean a lot of insight as to where this money is coming from and what the spread looks like, so we can learn everything about the company, so we can make a very educated decision. Now, this does not substitute your due diligence. You're supposed to do that on your own. This is not your due diligence, but it could be a very good introduction into what you need to be looking for, at least from my perspective. That's what I think is important. Now, you may have different opinions. I'm not a professional, I'm just an investor like you. So just make sure that when you make a decision in the market, you're making that decision yourself, and you're making your own decisions and risks, okay? You can lose money in the market. Now, having said that, let's go back into the analysis here. Revenue, as you can see, last 5 quarters, we're doing pretty well. This tracks very well with the interest rates increase from the Feds. All this additional revenue is basically derived from the cash sweep program that they've implemented, right? And they're offering now a cash sweep of 4.65% after the last Fed increase, which is a lot. All right, that's a lot. It's very competitive. Like, you can't get this basically anywhere in a money market account. I actually did a cash yield video not too long ago, so if you're interested, you can go check that one out. Click on the videos on my channel and look for it. It's probably one of the last 3 videos that I made. I may put a link in there if I don't fall asleep before I upload this video. Okay. All right, moving on a little bit quicker now. We're gonna skip over the stuff, cost of revenue, all that. We're gonna skip over it a little bit. Actually, it's worth looking at this, where the expenses are coming from. So selling, general, and admin. So look at the expenses in the last quarter. So they reported, an income of negative $511 million, which is, even though the revenues were increasing, the earnings were actually increasing as well until this last quarter. And where did it come from? The biggest change was selling, general, and admin. So I'm thinking it's the rollout of all these programs, like the IRA matching and all that stuff. But I would be interested to see a much better breakdown of this number here. So moving on, as I mentioned, net income, this is what it looks like. The trend was actually up until this one-off event. I actually don't know how much of it is sticky and how much of the expenses one-off, but we'll find out next quarter. Shares outstanding is about steady. They've been selling just a little bit of shares over the last few quarters, like very unnoticeable, basically none. The big sell of shares happened in late 2001 and early 2022. That's when they sold the most shares. That's how they got their money in the bank. Okay, because they have no debt. Free cash flow per share, obviously, that's not where you want to look at. Profit margin is negative because they're losing money at the moment. But that's not uncommon for growth companies. And this is a growth company. They keep innovating, they keep growing, they keep trying to attract customers, they keep trying to improve their deposit base. And how much is their actual deposit base? Well, a quick Google search shows us that they have $74.7 billion that they're in charge of. Just for comparison, a financial conglomerate like Citi, which I did an analysis on not too long ago, holds like $2.something trillion. Okay, so this is still a small player in the field when it comes to like controlling funds. Moving on, balance sheet, cash and cash equivalents, boom, $10 billion. Total assets, $27 billion, which is up $4 billion from last March. So a lot of people say that Robinhood's been shrinking. That's not true. Okay, they're actually increasing their asset and liability base. So they're growing as a company when it comes to like total size of money operations here. Okay, total assets, $27.79 billion. Total liabilities, $20.74 billion, which leaves us with shareholder equity of $7 billion. $7 billion shareholder equity. Enterprise value worth negative $2 billion. Just keep that in mind. kind of crazy, ain't it? Okay, statistics. We can't really learn too much from these statistics. The only one that maybe we can learn from here is PS ratio, so price to sales ratio 5.25 and forward PS of 4.21. That's about it. Everything else obviously is just NA. Nothing else to learn here. Oh, income tax. Look at this. Huge $2 million income tax that they paid. And the benefits of not making any money. You don't have to pay taxes. Dividends, nothing to look at. Alright, so then we're going to the 10Q to figure out like what the hell is going on. Where is this money coming from? So here's a big breakdown, right? First, I'm going to look at some of the total assets here and where these assets stand in a little bit more detail. So here's the cash equivalent. So the bar on the left here, let me see if you can see this. Oh, I have to move this so you can see. Okay, unlock, unlock, scroll, hello, window capture. Oh, there we go. All right, you have to be able to see it. I will probably revert back later, but just so you can see, I'm gonna hide myself. Over here on the right, you can see March 2022, and on the left and on the right, March 2023. So I'm gonna read out the columns and highlight what they are. Okay, so cash and cash equivalents 6.3 billion. Last March 5.5 billion. This March, which seems like it's less, but they have cash segregated under federal and other regulations of 3 billion last March and 4.2 billion this March. So it's actually an increase. Okay. Now, this $3 billion mark here, receivables from users net. This big number, this is one of the biggest difference here. Assets related to user cryptocurrency safeguarding obligations. Okay, so they safeguard the cryptos. This is actually the risk. Okay, this is the risk. I will talk about the risk later, but I really don't like the fact that they're liable for the deposits of cryptocurrencies, and that may or may not bite them in the back at some point. But one point that needs to be made here is that 8.4 last March in 2022, by the way, in the beginning, in March, versus 11.5. So this asset base has grown. It has grown. It has not decreased. Okay, total asset base here. User held fractional shares. So they hold the obligation for the fractional shares. 1 billion versus 1.2 billion this March. So that's increased. So more fractional shares under management basically. So that part of the business is increasing as well. They don't make anything off of this, they just hold them. Okay, it's a liability. It's an asset and liability at the same time. It cancels each other out. It's more of a liability though, because if something happens to it, they're liable, right? All right, now health to maturity. Okay, nothing else significant really on this side here. Okay, so you can see the liabilities here. So for example, these numbers will be exactly the same. They have 11.5 billion in crypto assets, crypto related, and here it is in the liability side as well, canceling each other out. Same thing with the fractional shares. Okay, and here's the difference. Total liabilities and stockholder equity last March 23.3, this March 27.8. So an increase. What else can we learn here? Revenues, transaction-based revenues. So the big stink was, all right, let me put my face on the camera here. Unless you really don't want to see it, we can make a change. The big stink was because of this regulatory stuff, right? They might not be able to get order flow revenue, and their transaction-based revenues will decrease, right? Because zero commission, right? They have to have order flow in order to make money. And so that used to be a big part, almost all of it before, but now it's not so much. So if we look at here, revenues, transaction-based revenues in 2022 March was 218 million with an M. This March, 207 million. So it's a decrease of 11 million, right, in revenue. But look at this one. Net interest revenues in March 2022, when they first started hiking for the Federal Reserve. Now it's 208 net interest revenue. So they're collecting a ton more net interest revenue from their operations, from their sweep operations, okay, and their money market accounts. Other revenues is staying steady, 26 million. I'm guessing this is like Robinhood Gold premiums, 26 million. I'm a Robinhood Gold member here. I pay for that $5 a month in order to have access of free $1,000 worth of leverage and Morningstar research and instant deposits and all that. By the way, that's great. The instant moving money around Robinhood is so much better than moving it around in other brokerages. Like I had an experience with Interactive Brokers. I mean, I've been having that account for a while, but it takes them like a week to settle the cash before I can even do anything with it. It's ridiculous. Like it moves so slow. So that's good about Robinhood. Okay, and one of the many things is good. Look, I know what you're thinking, okay? I'm over here trying to tell you that Robinhood is this great company, and it's like I didn't live through the period where they wouldn't let people sell their or buy more positions. They only let them sell positions, during the craze of the meme stocks. And then they had a bunch of shutdowns, and they're chasing people down for monies. And then, they had technical difficulties where people were levering up like put sells in order to raise more cash than they actually have. And, it's just the money makers gone crazy and like flooding people with fake money that they don't have. And then they have like negative $2 million accounts and all that. I understand. Okay. I understand that there's difficulties, but the fact is that the company was new. It's not an established player, and they make mistakes, but they learn from those mistakes. Yes, they have learned. You might think I'm delusional, but I'm not. Okay. These are the same guys. I understand. These are the same guys that didn't know the difference between SPIC insurance and FDIC insurance. Was it SPIC? No, now I'm doubting myself. Let me see here. SIPC, yes, there you go, I misspoke. SIPC insurance and FDIC insurance. Like, I get it. Those are the same guys. That's correct. However, they learn, okay? They live and learn. By the way, for those of you wondering, SIPC is insurance on your holdings in your brokerage account. It's not an insurance for deposited cash. Okay, FDIC is the one that insures your cash. But anyways, they have both now, depending on which bucket you put them in. They can insure both. All right. So, just want to make that clear. Moving on. Operating expenses. Okay. Brokerage transaction. Okay, so the expenses have decreased when it comes to technology and development. Brokerage and transaction expenses have increased by 5 million. Operations, okay, marketing. This is what I wanted to see. So operations have actually decreased. So if you remember, they actually laid off like, I don't know how many % of their workforce. So they laid off a lot of people after the boom in 2021. And so they've become a little bit leaner. So operations have actually decreased from 91 million to 42 million. So much leaner. And keep in mind, they have 10 billion in the bank. Billion with a B. All right. Marketing actually decreased for some reason. I thought it would be increased. So 32 versus 26 million. Only 26 million. 2023 March quarter. Okay, this is a big one here. general and administrative. Okay, so this is where I think the matching is coming in with the Roth IRAs and the IRAs. 1% automatic built-in matching. So 268 million last year versus 647 million this year. So that's a big increase there, and I think that's where all the losses are coming from. Let's move on to something a little bit more interesting. Where was page 14? Okay, a breakdown on their transaction-based revenues. So people might be interested to know, okay, fine, a lot of their revenues are from transaction-based. What is the breakdown there? I know people a lot of trade a lot of options, stock equities. What does the breakdown look like? Well, here it is. Okay, so transaction-based from options, 127 million. Okay, in revenue for Robinhood versus 133. So since last March, their options-based revenue has actually increased. Interestingly, and expectedly, cryptocurrencies from 54 million to only 38 million this quarter from last year's quarter. So a decrease. So people trading less currencies on Robinhood. I would definitely expect that, but I also expected options to increase, and that's also the case. This one, though, I did not expect. So equities, 36 million versus only 27 million this quarter. So the only thing that's increased is just options revenue, which is a bit surprising. And net, the revenues from transaction-based operations here has gone down from 218 to 207. But I definitely think that that's temporary. Definitely. And number one reason I think that's the case is because I think that even if their users are not growing as fast anymore, and a lot of people lost money on Robinhood and they don't want to come back, I think the people that actually did make it will stick around for the long haul. And now that they like the company, they like how progressive it is, they like the functionality, maybe they get drawn into the ease of use and the interface. Look, I'm one of those guys. Let me show you my account. It's a public account, so don't trip. If you're new to the channel here, then you'll know that, you might not know that I actually show this account quite often, so it's not a big deal. So this account here, has been around for a long time. Let me show you the old time chart here. So for those of you that, for people that survive, so I didn't trade much back then, but in 2015, but here's proof that I had this account March 2015. And I really started trading with it a little bit in 2018. And I have survived, okay? I was in trouble for a little bit here. But this is actually a false number because I put money in and then I've taken money out. So this percentage is not exactly 382 or 377 or whatever it's showing right now. It's probably realistically like around 250 because I took money in, I put money in and then I put money out. So right around here, took money out. So it's not that accurate. So don't I'm not showing this to impress you, right? I'm just showing you that I've survived. Okay? And I'm not alone. It's not like I'm the only person that's, surviving. There are other investors like me that perhaps have some prior experience from other apps and stuff and know when to take risk or what have you. And the deposit base is just going to keep growing, right? As the stock values grow, as people earn more interest and they don't take them out, and as more and more savers emerge, the value of total assets held by Robinhood is going to go up. So where was it? There you go. This number here, $74.7 billion, is going to go up over time. And really, that's kind of like the farming ground for brokerages, for firms like Robinhood. Like they farm that cash for money, right? In one way or the other. And what I like is that they're adaptable. At first, they did a lot of money. They made a lot of money through order flow, but now, as you can see, interest earnings from cash sweeps and stuff like that is like half their revenue now. It's amazing. It's incredible. So they're adaptable. They adapt a lot quicker than many other people. All right. What are we looking at here? You might see images like this. Are we done with the numbers? Let me see. Okay, there's probably one or two more things to look at that are interesting. Let me see if I can find it. Oh, this is a breakdown of all their cryptos. Whoa, Doge. What? Look at Doge. Unbelievable. So Bitcoin. Personally, I don't invest in cryptocurrencies, but look at this. So Bitcoin has actually grown quite a bit. Ethereum holdings have grown, and Dogecoin has grown. Almost flat, but it has grown. And then other currencies grown as well. Everything's grown. Well, that's crazy. Dogecoin more than Ethereum in last March. That's incredible. Now it's about equal, a little bit less. Craziness. Okay, I did have something else. I wanted to show you the market makers. Let me see if I can scroll through and find it real quick. I know it's One Take Drake. I'm sorry if I have to. Alright, I found it. I don't do edits with these. It's conversation style here, okay? Citadel Securities. These are the market makers that do the order flow for them, okay? And they list everybody who has an excess of 10% of total revenue. So they listed 3 firms for that. Citadel, many of you know and are familiar with them. 22% versus 13% this March. Entities affiliated with Susquehanna International Group. 12% versus 5% this March. And then entities affiliated with Wolverine Holdings, OP. All right then. 10% last March versus 5% this March. So all others individuals less than 10%. 28% last March, 22% this March. So there you go. Total as a percentage of total revenue. This is the big figure that I was talking about. It was 72% last March in 2022. It's only 45% of total revenue right now. All right, and the revenue's increased. You see, so that's how much the interest earnings are helping the company at the moment. And let's take a look at some graphs while we're at it. Let's take a look at some graphs. Let me see the agenda. How are we sitting here? Okay, we're talking about strategy. We're bouncing between strategy adaptation and financial valuation. So let's take a look. Okay, first, you might see, where was that figure? There you go. You might see a figure like this. I know it's in the corner. Let me move it. You might see a figure like this. Okay, this is total monthly active users, and it has been decreasing. And this quarter is probably a little bit less. But just because they're not active doesn't mean they don't have holdings. Okay, it just means that they're trading a lot less. The holdings are still going up, like people don't realize, right? And accounts are not going down any, they're not going down. Okay, they're going up steadily. So this figure is very deceiving, and that's what everybody wants to focus on. Oh, nobody's churning over trades in Robinhood, and therefore they don't make order flow money, right? So therefore revenue is decreasing. Therefore the company is dying. Well, no. Just because they're not actively trading doesn't mean the company is making less or that there are actually less users of the app. They're just not active. They're just not trading. They're just not giving commission order flow, right? Not commission. They're just not giving order flow money. So let's take a look at some other ones then, huh? All right, what is this one? Net. Let me shrink this down a little bit. And I'm going to disappear. I'm going to put myself out of the picture. What is this? Net cumulative funded accounts increased by 50,000 to 23 million in Q4. So 50,000 added funded accounts. Do you see this? So the accounts are actually increasing, although slowly. It's not 2020, 2021, but they haven't gone down. Look. So they're still adding on extra accounts. Furthermore, what are we looking at here? Total net revenues, the breakdown. So the light green, the lime green is transaction-based revenue. You can see in 2021, 2022, okay, Q3, transaction-based revenue is gone down, and it's kind of stabilized around 208. However, you can see an increase in the light green, not lime green. Is that lime? Lemon? I don't know. Chartreuse, tennis ball green. So in the light green, that's net interest revenues. And they were steady at around 60 million. But now, in the last quarter of in the third quarter of 22, they've grown to 128. And what do we put it now? What was it? It was 200 something, right? 200. So 208. So net interest revenue went from 55 million last March to 208. So imagine on this graph, this lime green, this green thing, light green thing, 208. So that would be like, up here, double it. You see, to put it at 400 and something in revenues. So that's significant. What else we got? Net interest revenues. All right, Q3 2022 is the bar on the right. Let me see if you can see it. Yep. Okay, so this is a little bit more of a breakdown in net interest revenues. Okay, the part of the business that I was talking about, the one that's now 200 and something, right? 208, the one that's 208 million. We're just going to look at the breakdown that it had in Q3 in 2022 because I can't find visualizations that are updated for this quarter. Securities lending is the lime green, the tennis ball green. Securities lending. If you guys remember, they introduced a program where you can lend securities and they give you a portion of the rent that they collect on the securities that you own. This is the portion visualized that they collect. And now it's probably about the same, maybe even more, because there's just more total base in their under their possession, under their management. All right. Now the light green, the grass green here, that is margin interest. So I would expect that to actually come down a little bit, even though the interest rates have gone up. I don't know how much they're making margins. Maybe it's more. I would expect people to actually tune down their margin so they don't have to pay those high rates. I've done that myself. But for the people that still are on margin, then they would have to be paying more money to Robinhood. So margin interest, this green area is probably maybe even grown a little bit. Then we have interest on investment in corporate cash. This is the cash sweep program. You can see the increase starting 2021 Q2, Q3, and it's even bigger now, okay, in 2023. And then lastly, this dark green area here, okay, that is interest on segregated cash and cash equivalents and deposits. So the interest that they get, the difference that they get, okay, hold on, let me put my face on that. That dark green is basically the difference between the cash sweep that they're getting and they're giving you. So they collect a very small percentage. I don't know how many points, probably varies because the cash sweep is not very consistent. So they give Robinhood Gold members 4.65% of that, but they probably get around 5% from the banks. So they collect that extra difference. I don't know exactly if it's 5 or whatever, but somewhere around there. They skim off the top, and that's what you're seeing being reflected here in revenue. So that's their source of revenue for the moment. Okay, and lastly, that little Well, actually, there's two more things. So the orange one on the bottom, it's interest expenses related to credit facilities. Okay, so I think that's negative. I don't know. Sounds like a negative thing. So that's a drag. Okay, that's a drag on the revenue. The one up on the top is the cash sweep. So maybe actually cash sweep. So maybe I'm confused because I thought that that's the interest on segregated cash and cash equivalents and deposits was the cash sweep operation. But perhaps I'm confused. Either way, if I'm confused, if you know, please explain in the comments. Because I thought that was the same thing, but apparently not. Okay. Now, we've gone through all this. Okay, we can safely close this. And now we're going to go into, finally, we're going to talk about the risk. So the big risk for Robinhood, even though they're very adaptable, I think, is this, like, are the actual crypto holdings. All right, I think that if something happened, because it's all liability basically. Yeah, they're getting in new people coming in there, and perhaps they make more on order flow from cryptos than actual equities. I don't know what portion of it they make off of the cryptocurrency exchanges. If it's very substantial, perhaps it's worth the risk. But if it's not substantial, I don't like them having to be liable for all these crypto. Anything can happen. I mean, even if they do like all these cold storage techniques and whatnot, or perhaps they outsource that liability to a different company. If they do that, then that would be the smart thing to do. I think for a small premium, it's worth it to outsource the risk to a different company, and then the other company be liable for that crypto. But then there's still the risk, because if they lose it, they may not be able to make good on it, right? Even if they're insured, if the other company actually pays the insurance for their crypto holdings. So if something happens to that, like, Robinhood is ultimately on the hook. So I think that's a risk. So that's the big risk in my opinion, and it's not that big of a risk. There are a couple of other risks when investing in Robinhood. One is the regulatory risk. They could just regulate them to death. They might say, oh, you need to have a banking license. Oh, you need to have brick and mortar in order to represent, your bank or whatever it is. You need to have in-person customer service where people can walk in now. They might force it into being a traditional bank, in which case the operational expenses will be so great that there will be no point in this company at all. It was entirely based on being ultra efficient and out efficient everyone else. And if that's not possible, then there's no point in Robinhood. So that's a risk. There are other risks, of course. You could suffer, a lot of reputational risk and people flow out of your company. But I mean, come on, man. How much more reputational risk can you suffer? These are the same guys with the issues I listed earlier. I mean, everyone hates Robinhood, virtually, for some of the things that they've pulled off. The media was after him. Now when I watch him on interviews, actually it's not that bad, because they're actually treating Vlad pretty nicely. It's a big contrast to what it was treated like in 2020, 2021. People are vilifying him for, the whole like meme stock mania, and all the people losing money left and right, making all this drama and forcing like hedge funds to close and stuff, and halting trading, and just craziness happening. The app's freezing, the servers like dying. So there's a lot of anger towards the company and the CEO at the time, and kudos to him. He did his best to like go into all these YouTubers and talk in like every interview that he could, in order to represent himself and the company, and to ensure everybody that there's nothing malicious going on. They're just learning and growing and making mistakes. At least that's how I took it. That's what it seemed like to me. So there are definitely risks out there, but I mean, at the end of the day, the way I started this video is by telling you that the company is worth negative $2 billion. And to me, that's insane. I mean, it's a very innovative company. It's a growth company, but it makes revenue and it has increasing revenue and it's adapting. Like, I get it that it loses money, but if it cuts down its staff a lot, you can actually be a profitable company like in a month, you know? Well, I don't know how much their severance packages would be like, but it might not grow and it might not innovate, but if they wanted to be profitable, they could make it happen. They could make it happen. I think, though, they're going to try to be large and in charge and really take their mission by the horns and become this big company that's taking care of the new generation of investors. I mean, look at some of the things they're doing, right? Some of the things they're doing right now favors a very slow growth type of client. It's not that quick in and out person that's just going to lose all their money in the market and quit and never look at the app again. There are initiatives like 1% IRA matching, right? No brokerages does this. Only employers do this. So that's one thing that brings in people that want to hold their money down for a long time in the platform. So that's good. Also, the high interest rate that they're paying out on their cash deposits is also attracting a more conservative type of investor. So I think the profile of the investor that's going to be coming in or becoming or growing up with Robinhood and becoming, a more mature, more long-term style investor is really going to give a lot of stability to the company and let them play around with a more sticky depositor base investor base, client base. So I think that's going to work in a benefit and a big tailwind for the company in the long run. And as trust is rebuilt in the company, as the brand tries to, over a long time, repair its image, it does take a long time, but if it does happen, I think it's all green from here. All right, I've been talking a lot about this company, and I'm reaching almost the 45-minute mark that I thought I would reach. I'm going to try to save you those last 3 minutes of talking. I'm going to do my infamous mic drop here.